ESP, federal government and cement producers agreed to reduce cost of cement to achieve 300,000 social houses. AFCFTA will boost Nigeria's exports, says Nigerian Economic Summit Group. CBN cut Treasury bill sale by 62% to 7.77 trillion naira. Plus, dollar slips into 2021 as its investors ride downtrend. Details of this and more on Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Federal government and cement manufacturers have agreed on a discount price on cement for the construction of 300,000 houses under the Economic Sustainability Plan, ESP, for low-income earning Nigerians. The 300,000 housing units is part of the federal government's social housing scheme aimed at providing affordable houses for low-income earners. While visiting the completed model houses in Day, an outskirts of the Federal Capital Territory, Vice President Yemi Osinbajo said it is possible to deliver decent and affordable accommodation that will be within the reach of many Nigerians. In a statement issued by the Senior Special Assistant to the President on Media and Publicity, Office of the Vice President, Laulu Akande, Professor Osinbajo noted that the contributions of major cement manufacturers in the country towards the success of the program is key, as they have agreed to give cement for this project at a considerable discount, which is a very helpful thing to do. A study initiated by the Nigerian Economic Summit Group, NASG, on the impact of the implementation of the African Continental Free Trade Area Agreement on Nigerian economy has revealed that it would have positive impact on Nigeria's exports. The study, titled Impact Assessment Study and Economy-Wide Implications of the AFCFTA on the Nigerian Economy, states that if linear cuts would be applied to tariff elimination, the country's aggregate export will increase by 0.02% in both the first and second 5-year implementation periods. But if the tariff elimination is backloaded, aggregate export is expected to increase by 0.01% and 0.03% in the first and second implementation periods. In 2018, African heads of state signed an agreement that would bring to life the African Continental Free Trade Area, considered to be a game changer in African regional and international trade. The African Continental Free Trade Agreement, after several delays, came into force in January 1st, 2021. It is set to become the world's biggest trade deal in terms of participating countries since the establishment of the World Trade Organization in 1994. Over to Dennis Adegunloye for details.
African heads of state signed an agreement that would bring to life the African Continental Free Trade Area. Considered to be a game changer in African regional and international trade, the African Continental Free Trade Agreement, after several delays, came into force on January 1st, 2021. It is set to become the world's biggest trade deal in terms of participating countries since the establishment of the World Trade Organization in 1994. African economies traditionally lack capacity to be globally competitive, but this pursuit and achievement of market integration is bringing together the continent's 1.3 billion people. The human resource alone, experts believe, could create an economic bloc with a combined GDP of $3.4 trillion. The agreement is also expected to enhance competitiveness and stimulate investment, innovation, and economic growth by increasing efficiency and eliminating trade barriers, including the removal of tariffs on about 90% of goods. With the African Continental Free Trade Agreement now in motion, intra-African trade is expected to grow by 33%, and Africa's total trade deficit is expected to be cut in half. It is considered not just a simple free trade agreement, but a vehicle for Africa's economic transformation, facilitating movement of persons and labor, competition, investment, and intellectual property. The agreement was due to come into force on July 1st, 2020, but the COVID-19 pandemic led to its postponement. And with COVID-19's impact on world economies, many of which fell into recession, with this agreement, opportunities are believed to exist to speed up economic recoveries with increased intra-African trade, easing the burden created by the pandemic. Experts, however, say that to give the African Continental Free Trade Agreement the best chance of delivering on its potentials, the continent will need help and investments for updating its infrastructure.
The African Union chairperson Cyril Ramaphosa and Ethiopian Prime Minister Abiy Ahmed have congratulated Africans for commencing trade under the African Continental Free Trade Area. The continental trading under the AfCFTA started on January 1st, 2021. South African President Ramaphosa described the takeoff of the Continental Project as a fulfillment of the vision of founders of the OAU that is today known as the AU.
Our treaty will boost intra-African trade. It will promote industrialization and competitiveness and contribute to job creation, and it will unleash regional value chains that will facilitate Africa's meaningful integration into the global economy. The treaty will also improve the prospects of Africa as an attractive investment destination. Our treaty presents immense opportunities for the private sector in Africa and will be a catalyst for the development and expansion of private enterprise on our continent.
Under the AfCFTA, trading tariffs on various commodities where rules of origin have been agreed will be drastically reduced, and traders of all sizes will have access to a much bigger market than they are used to. The Central Bank of Nigeria injected $4.37 billion into the foreign exchange market in the third quarter of 2020 as part of efforts to ensure the stability of the Naira. The CBN, with the African Continental Free Trade Area now in motion, intra-African trade is expected to grow by 33%, and Africa's total trade deficit is expected to be cut in half. Nigeria is critical to the success of this dream, considering her size and all ramifications, but COVID-19 is forcing all governments to take a deeper look and re-strategize policies and plans. Joining me is Paul Alaje, an economist, to discuss the events as they unfold. Mr. Paul, if you can hear me, you are welcome to Business Express.
Yeah, thank you so very much for having me.
Okay, Mr. Paul, the AfCFTA has been viewed as a driver for growth in Nigeria, but now we have second wave of COVID-19. Just how would the single market drive growth in Nigeria already in a recession?
The African Continental Free Trade Area Agreement will drive significant growth. Recall that even when we had the first wave, government announced lockdown, and this second wave, government has been very tactical and wants to be very careful before announcing another lockdown. And I think on this, I'm on the same page with authorities on this regard. This is because when you look at a lot of benefits, manufacturing sector that that I've personally advocated for over the years might now have a lot of windows for extra demand. Nigeria is about 200 million people. Population of Africa is approximately 1.3 billion people. And when you look at the GDP size, Nigeria has about $500 billion economic size in terms of GDP. But when you look at that of Africa, it's even far more. The good news is that this will drive growth because the stimulation will come from the demand side. And this is what you will start to see from the production of cement within and outside Nigeria to anything that Nigeria has comparative cost advantage over the rest of Africa. And this is what you will see in the coming months and if not even in the coming years. We are going to see Nigeria produce more and more people will get into the market where so that Nigeria can produce for the rest of Africa. And it might not necessarily be just production of cement. You can also use example of shea butter, which a lot of West African countries consume, but there's a lot of bottlenecks regarding bringing them. So the natural resources, Nigeria is vast in that we have natural resources almost in all parts of Nigeria. Also, some finished products which large organizations, that of captains of the industry, now have bigger markets. So even export excesses, they may have to. And so when there is excess and people see books, because at the end of the year, organizations will report their revenues. When people see there is more profit, you will see more entry into that sector to compete with them, driving down price, which means we're going to see some level of stability in inflation. Number two, job increase, which means there will be some level of significant reduction in unemployment as published by National Bureau of Statistics. The benefit for Africa Continental Free Trade Area cannot be overemphasized. We all know it's going to benefit us. And in terms of infrastructure, even private sector that wants to export to the rest of Africa, this is the time they will even be willing to sign that public-private partnership with government. And I hope that government will be better positioned to see how we can repeat what we are currently doing in Apapa Oshodi Expressway.
Okay.
And so that
Mr. Paul,
more and more private sector can get even involved. The most important thing is what will it mean for monetary authority? What will it mean for exchange rate? If Nigeria, particularly business community in Nigeria, latch on to this opportunity and continue to export, we are going to have significant reduction in pressure on our foreign reserve. And as a matter of fact,
talking about the opportunities therein for us to key into, for Nigerian traders to key into. Of course, Nigeria has been on the path of diversification, especially for the revenue sources. With the AFCFTA, how can Nigeria leverage on the opportunities available to leapfrog gains and build systemic recovery? More like we're looking at recovery in the first quarter of 2021.
So the way many countries that Nigeria wants to emulate have done it, more revenue has come from taxes. In Nigeria, is not yet so. But when government sees that it is no longer crude oil that gives bulk of the revenue. What gives a lot of people jobs is manufacturing. Government will now find itself to be part of that manufacturing so that it can make more revenue. So if you are manufacturing, say, fabrics, revenue from fabrics is different from revenue from television. It's different. So that way, we have diversified our economy enough without overcharging taxes of the people, so that at the end of the day, it will now become unproductive for producers in a way. So for me, I strongly believe that is the way to go. Nigeria should plug in on time, and government should provide necessary support for private sector operators.
Okay, talking about manufacturing as a key thing to key into, what will tariffs and customs procedures be like under the single markets?
The truth is that we might see reduction in revenue coming from custom authority in terms of tariff you'll be getting. You might see significant reduction, but what you will see is that FRS will also generate more revenue because like there is going to be higher demand side. You will see more revenue coming from VAT. You will see more revenue coming from personal income tax, which is good news for all the states and local governments. You're also going to see revenue from VAT, of course, state government and company income tax. Federal government will also have a loss to be thankful about. So for me, I think think is the way to go. Yes, we're going to see reduced revenue coming from customs, but we're going to now have more a sense of revenue will be generated internally. So it's a trade-off. You can call it a set-off. So there is no problem at all with that.
Thank you so very much, Mr. Paul Alaje, for sharing your thoughts with us on this one all-important continental market.
Thank you so very much for having me.
Thank you. Okay, moving on, the Central Bank of Nigeria sold 7.77 trillion naira worth of secondary market treasury bills in 2020, down by 62% from 13.92 trillion naira sold in 2019. The sharp decline in open market operations treasury bill sales in 2020 reflects the impact of the Apex Bank's decision to exclude local investors, individuals and corporates from investing in open market operations bills. The ban, which came into effect on October 23, 2019, was introduced to forestall banks from using open market operations treasury bills to circumvent the 60% minimum loan to deposit ratio directive of the CBN. Secondary market treasury bill is one of the instruments used by the CBN to control money supply in the economy. Disclosed this in its third quarter economic report, saying through its periodic interventions in the forex market, it continued to boost the supply side of the market as COVID-19 crisis weakened the private sector supply chain segment of the market. The report adds that during the third quarter of 2020, total foreign exchange sales to authorized dealers by the bank amounted to $4.37 billion, a decline of 2.3% from the level in the preceding quarter. However, interbank sales, interventions at the I&E window and SME fell by 22.3%, 18.7% and 3.5% to $0.15 billion, $0.39 billion and $0.30 billion relative to their levels in the preceding quarter. The dollar started the new year more or less where it left off, under pressure from investors who reckoned low U.S. interest rates and an eventual worldwide recovery from the coronavirus pandemic will make it a laggard against other major currencies. Let's now see how the naira is exchanging for other currencies. Nigerian stocks ended the last week of 2020 solid despite a 2 days holidays. Both gauges appreciated and presented by Musa Abubakar.
The NTA All-Share Index and market capitalization appreciated by 3.79% and 3.83% to close the week at 40,270.72 and 21.057 trillion naira. A total turnover of 1.8 billion shares worth 25.9 billion naira in 14,634 deals were traded by investors on the floor of the exchange. All other indices finished higher with the exception of NSE Banking, AFR Bank Value, and Consumer Goods, which depreciated by 0.56%, 0.02%, and 0.50%, while the NSE ASEM and NSE Growth indices closed flat. The financial services industry led the activity chart with 1.2 billion shares valued at 7.6 billion naira traded in 7,251 deals. The oil and gas industry followed with 193.5 million shares worth 783.2 million naira in 1,093 deals. The third place was consumer goods industry with a turnover of 117.7 million shares worth 1.050 billion naira in 2,116 deals. Trading in the top three equities were ICO Insurance PLC, Access Bank PLC, and United Bank for Africa PLC, which accounted for 763.1 million shares worth 3.029 billion naira in 1,764 deals. Exchange traded products, a total of 26,141 units valued at 185.3 million naira, were traded this week in 35 deals, as well as total of 5,218 units of federal government bonds valued at 5.7 million naira, were traded in 12 deals. Summary of price change saw 32 equities appreciated in price during the week. 32 equities depreciated in price, whilst 97 equities remain unchanged. Musa Abubakar, Business Express.
And on the first trading day for the year, transactions on the floor of the Nigerian Stock Exchange ended in positive territory. Trade closed bullish by 2.18% to close 41,147.39 basis points, with market capitalization at 21.5 trillion naira. 211.9 million shares worth 1.4 billion naira in 3,438 deals were traded by investors. The most active stocks are ICO Insurance PLC, FCMB, and Transcorp. Shares in Asia Pacific were mixed on Monday as the first trading day of 2021 kicks off. Bosseri Abel reports.
The coronavirus pandemic continues to be the main focus for European markets now that the UK's separation from the EU was completed on New Year's Eve. The UK-EU post-Brexit trade relationship has now begun, with onlookers waiting to see if there is any disruption to trade flows caused by new rules and paperwork for exporters. European stocks advanced Monday, the first trading session of the new year. Shares in Asia Pacific were mostly higher on Monday, while oil prices jumped as the first trading day of 2021 kicked off. Shanghai Composite gained 0.86% to 3,502.96. Nikkei dipped 0.68%, while Hang Seng Index rose 0.89%. U.S. stock futures were higher early Monday ahead of the first trading session of 2021 following a volatile year. Dow Jones Industrial Average Futures implied an opening gain of 175 points. S&P 500 and Nasdaq 100 futures also both traded in positive territory. Africa stocks opened mixed, with South Africa's JSE Africa Top 40 and Nairobi's all-share posting gains, while Ghana's GSE Composite was marginal. Bosside Able, Business Express.
Oil prices rose on Monday on expectations that OPEC and allied producers may cap output at current levels in February at a meeting later in the day, as the coronavirus pandemic keeps worries about first half demand elevated. This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizX. Business Express returns Tuesday by 9:30 a.m. Be safe out there.